Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, great to have you with us today. Thank you so much for the time. We're matching in our pink. I love this. On Wednesdays, we wear pink. Okay, back to markets. A pretty flat finish, in fact, today. Not too much going on. Again, holiday season very much seeming to be key when it comes to some of the Northern Hemisphere trading action.
Yeah, and I heard you say it before the break. I mean, in aggregate, the market didn't move at all, but we had some stunning numbers today, especially retail sales, as you mentioned, the Empire Survey report. What's ironic to me, though, is that some of the earnings reports that came out were so bad and hit some of the retail stocks pretty hard. Not major retails, but Advanced Auto Parts, Dick's Sporting Goods. I mean, at least in the U.S., they're big stocks, but they got slammed. So a very slow day, but continuing on the theme from yesterday with Treasury yields higher, the curve steeper, the dollar moving higher again. The difference today was that the economic reports were really good.
Absolutely. And with this in mind, I mean, in terms of how we are seeing that move continuing, of course, we continue to be in that bull market. But I mean, are you starting to pick the top, or are you still happy to go with some of those safe haven names?
Yeah, some of those safe haven names, I went into them a while ago because I do believe that the risk-reward trade-off in the equity market is just not there for me, at least in the U.S. Not to say I believe a crash is imminent or that we should just sell everything, but I'm clearly and continually underweight the U.S. But I do believe we're sooner to the end than we are at the beginning of the cycle. And just like last week, I continue to be overweight Eurozone and also the emerging markets. But the emerging markets, you do have to be picky because you have to have a conviction on the U.S. dollar as well.
Of course. I mean, with that in mind, in terms of your underweight, overweight move, I mean, what sort of sectors are you continuing to look at also within this space?
Sure, that's good. In the Eurozone, it's cyclicals, but primarily it's financials. And I know that sounds counterintuitive, given I think that the Eurozone or the Euro is going to go higher. But I do believe that, you know, the value, they're so undervalued to the market that I think that's the best place to put your money. And when it comes to the emerging markets, that's a very, very a tough one because it's really dependent on the country. But I do think anything that is national, not an international company, will probably benefit, especially when we look at China.
Well, I, in fact, wanted to go into that in a little bit more depth, just particularly in terms of how, given the way that you do view sort of international equities also and the way that you've balanced your portfolio, how are you looking to that weakness overall that we are seeing in the US dollar index? Admittedly, we have in fact had a couple of days in positive territory, but nonetheless, it is that broader weakness that we've been looking to when it comes to the US dollar.
Yeah, we know that the currencies tend to overshoot one way or the other. This move definitely wasn't expected. The dollar is a little bit higher than I thought it would be. That's one of the things I did get right this year. I thought the dollar would weaken, and I think it just when you look at the gap between interest rate differentials and the lack of inflation here in the United States, it just makes little sense to me to think that to be, bullish on the U.S. dollar in the medium term. I mean, short term, sure, but I do believe when you look at interest rate differentials, especially between the Eurozone and here in the U.S., it doesn't make a whole lot of sense. And therefore, I tend to be, want to be bearish longer term in the U.S. dollar, given the fact that there will be, fits and starts one way or the other.
Of course, on that note, we will leave it there. Larry Shover, great to have you with us this morning. Thank you.